And there we are.
All right, am I ready to go? I guess.
You are.
My name is Paul Russell. I work with the University of Massachusetts Cooperative Extension Service Risk Management Education Program. Tom Smorowski and myself, we write a grant through the USDA Risk Management Agency to help farmers understand the variety of risk management programs, which generally means crop insurance disaster programs, but also we try to focus some on evaluating risk and matching your needs with whatever programs are available for crop insurance / risk management. The goal of the grant obviously is to make farmers aware of what's going on with risk management and give them the tools to make an educated guess when they purchase insurance or choose not to purchase insurance. USDA Risk Management is a federal program, and they are charged with establishing crop insurance products and delivering those products to private companies to sell to farmers. Now, anybody involved in farming or aquaculture, the first thing we would want them to do is assess your plan before the growing season starts. Is your risk management plan adequate to get you through any type of disruptions that could happen? Is the inventory you have on your grant, what level of protection do you have? Or what strategies have you put in place to protect that crop? It doesn't necessarily mean always buying insurance. Maybe you pit your oysters in the fall, or the different things you do, put them in deeper water. But what have you done to protect that crop and the value of that crop? Input costs. Have you covered your input costs? Do you even understand your input costs and have done whatever you can either to minimize the risk of money you've invested or maximize the profit from it? Credit. This is the time when most farmers are scrambling. Actually, they should have already been scrambling around to make sure you have enough credit to get through the growing season. If there's a disruption, you have some source of income. Now, I say credit, assuming that people borrow money. You also may have assets that you've stored away to purchase your seed, to get yourself started and take you through a period when you don't have crops or income. What happens if you have a disaster? And the next probably 2 or 3 months can be rough, especially if you lose a crop now. It's going to be a slow recovery. Have you got a plan in place if you do have some losses? And then make an educated determination of how much money you want to put at risk. How much do you want to self-insure, and how much do you want to go out and purchase some level of coverage, crop insurance disaster programs that can give you some protection. And by going through this little exercise, you're going to strengthen your business plan and hopefully avoid an income interruption. Now, there's 2 tools that USDA has available. These are management tools: the risk management checklist and the SWOT analysis. These are just pieces of paper that will help you sit down and go through your risk management plan. It's nothing you're buying. It's just a tool you can use to guide you through the risk management planning section. Okay, the first one would be the risk management checklist. And I've got a link to the USDA RMA website at the bottom, so you can actually get your own risk management checklist. But you're going to go through an exercise where you evaluate risk, production risk, marketing risk, financial risk, legal risk, human risk, and just other risks that are not captured in those first 5 items. Production, very quickly. evaluate the risk in the event you actually lost your crop. How are you going to recover from it? What are the elements that put your crop at risk? Have you looked at other production practices that may be less risky? Have you considered doing something different or trying something different than what you did or what your father did or what your grandfather did? A lot of farms, you wind up just continuing on doing what the last 3 generations have done. And quite often, and while it worked for them, it may not work for you. So, have you at least gone to different meetings and listened to other growers, what they're trying in new concepts? Would you consider buying crop insurance? Taking some risk management money and actually purchasing a policy to give you some protection? Or are you going to invest that risk management money in some other product or strategy which will help you avoid losing your crop or losing income? Have you done a SWOT analysis? Strengths, weaknesses, opportunities, threats. All right. Markets. I mean, oysters, shellfish generally have had strong marketing, but do you have a written marketing plan? Have you considered diversifying, having more than one outlet for your oysters or whatever shellfish you're growing? Have you considered maybe expanding the number of crops you have in your operation so that you've got a more diverse product to put on the market? So, I mean, first thing would be sit down, have a marketing plan, understand the risk that's involved with your plan. Do I have one buyer? Do I have multiple buyers, etc. And take that marketing plan and link it up with your other financial and production plans. I mean, if you plan on producing a certain number of oysters per month, if there's an interruption, will the buyer continue to work with you? How are you going to meet his needs if it's a restaurant or another supplier? What are you going to do to meet his needs so that you keep that market in place? If you have excess product, where are you going to dump it or where are you going to send it? So these are all things in your marketing plan you want to plan for. Production interruptions or excess product. And then obviously you're going to look at price and what's involved in getting the crop to market. Should you look at maybe direct market, or is it better to deal with wholesalers? How much time you got and how you're going to manage your markets. Financial risk. First thing is, anyone in the business should have a current business plan. That business plan can include a lot of, income, expense, balance sheets, etc. Have you made any plans for a worst case scenario, such as if a few years ago we got hit with red tide and there was an interruption for, 6 weeks, or the neurovirus had hit Wellfleet? If the worst case scenario, you're shut down or you lose your crop, what is your alternative plan? Do you have a plan? And if you don't have one, develop one, but have a series of steps. Can you replace the seed quickly? Can you replace your gear? Do you need a source of credit? And in your business plan, you're going to want to know, what is your cost of production? What is it? And you're going to look at your cost of production through several lenses. Look at cost of purchasing seed and bringing it to market at each size. Maybe you can do it at 2 millimeter is much cheaper seed, but it takes you 24 months to get it to market. Maybe buying a little larger seed, you can get it to market just a little sooner. Maybe avoid one winter, which is a tremendous amount of risk. So what does it cost to bring that each piece to market, and where is that break-even point? So in your marketing oysters, you're not marketing them at a loss. Again, if you look at Cape Cod or places where growers are growing an intertidal situation, A lot of them take their oysters and put them in pits or refrigerated units in the fall. You know, would be worthwhile to put some of those on the market, even at a lower cost, rather than having the risk and the expense of overwintering oysters. Or if you don't have access to storage, you know, moving that product so it's not at risk over the winter. So, but you got to know what your break-even costs are and your cost of production. Know how to create a balance sheet, know how to read a balance sheet, know how to understand cash flow and income statements. The United States Department of Agriculture, through a program called SCORE, employs retired business people to work for free with farmers to help them create and read a balance sheet. They won't do the balance sheet for you. They will give you assignments. They will tell you, this is the information you need. You go bring the information, or you get the information, you bring it to them, then they'll help you put that into your balance sheet and then show you how to read it. So they don't do any of the legwork for you. They don't do any of the work. They just tell you and help you do it yourself so that you can, you can do this on your own once you go through the SCORE program. So that's a free service from USDA to help you go through that financial, your balance sheets, your cash flows, income statements, etc. How to do them, how to understand them.
Hey, Paul,
Yes.
I just wanted to stop you for a sec and tell you that the output of this whole semester's class is actually all of the students have to submit a business plan.
Perfect.
So that this kind of almost like a list based of what you need in order to kind of look at risk in your farm is super helpful to kind of bring this all together. So
yeah, you know, when you look at the checklist, it's kind of, I don't say hokey or whatever, but when you go, if anyone who went through this, especially students went through, it'd be like, here's a good checklist. Just go through. When you get it done, check it off. And yeah, I think it's a valuable checklist. So that's great that they're going to have to do a business plan and understand all these things. And hopefully they're working with someone from SCORE or someone in the business. Anyway, so going back, yes, so doing all those things, getting the right education to help you understand them, do them, and then interpret the, all the ratios, etc. It's super critical when you go to a bank or USDA for credit. You go to Farm Credit and you want to borrow money, and you go in and you can explain exactly your cost of production, go through your business plan, your balance sheets, income flow, and explain it, you're going to blow away the loan officer, and he's going to be more than glad to work with you. If he asks simple questions and you really don't have information and you can't answer them, he's not going to be confident. So your confidence in knowing your business is going to immediately spread to the loan officer, or that's going to be helping you. So again, going through all this stuff, your debt to asset ratio, growth. Is your business growing faster than inflation? Trends. Again, if you're working, you should have a lender you're at least, even if you're not borrowing, that you're talking to on a regular basis, that in the event you do need to borrow because you've had a loss, borrow because you want to purchase more equipment or expand the operation. Having that relationship with a lender is critical, but the most important thing is knowing your business and having the confidence in your business that will spill over to the lender, that he believes that you understand your business. Now, here's my crop insurance spiel. Again, how much money do you want to put at risk? You always can get some level of protection that will help you put a floor in how much money you can actually lose in this business. Well, tax liability. This is, another critical element of doing all your business planning is understanding your tax liability, what the potential is, and developing strategies. Again, hopefully if you have an attorney and you have a lender, that you would also have an accountant that would help you not make a mistake where you maybe move too much product in the fall or whatever, and wind up with a tax liability that was really an unforced error. Investigate, obviously, financing options. There are farm banks, farm credit, but there's also USDA. There are different sources, Small Business Administration. Just be aware of how they operate and kind of know where the office is, so in the event that you need to obtain credit, that you have some options. Available government programs. There are tons of government programs that are available to help farmers in general. Farm Service Agency provides credit, disaster programs to farmers. The Natural Resources Conservation Service provides a lot of grants for conservation practices, and that does include some to shellfish growers. A few years ago, Massachusetts NRCS provided money the growers could upgrade their boat motors from 2-cycle to 4-cycle engines. They had a program where they were retrieving nets, I think, from quahog operations, etc. So there's been different cost share programs. Just be aware of what programs are available. In Rhode Island, they're doing a oyster reef restoration program where they're actually hiring growers to help restore these oyster reefs. So there are programs. All the agencies have different programs. Be in touch with those agencies. Be in touch with USDA. Again, they generally will be at most of the meetings and they will be talking about these programs. Just be aware that they are available and can they help in your operation. Again, we get, financial, an accountant, insurance provider, know who these people are and have a relationship with all your business partners. And are you comfortable with your level of debt? Do you have a plan to get out of debt? And I think it's easier if you kind of develop that roadmap before you get too far into your business of kind of how you're going to borrow money, how you're going to pay it off. How does this benefit your operation? So that's it for financial. Legal risk. First and foremost, always make sure you get an up-to-date will. Do you have a living will? Do you have a strategy to move your farm to either leave the farm or to bring in someone in the family that's going to purchase the farm? Too often we see farms that they make this decision a year before they want to retire, only to find out there is no way to transfer that property, that farm, to the next generation. It takes years, and a strategy from an expert, a financial expert who can help you set up a business plan that will allow you to transfer it when you're ready, or leave the business when you're ready on your terms. Insurance policies, not just crop insurance. Clearly, you need insurance policies for liability, etc. So there's a whole variety of insurance policies you need to concern yourself with and understand. Liability from markets, the public, environmental issues. Do you understand all the terms of any contract or leases you have, such as the shellfish grant? Do you understand what you're allowed to do on the grant and not allowed? Markets, what are you allowed? What are your obligations when you sign a contract? Human risk. This is probably one of the toughest parts of your business. The one that no one wants to talk about is most farms, there are multi-generations involved, or siblings, etc., involved in your business. And it may just even be your wife, spouse. Have you sat down, have you come up with, have you discussed all of the goals that you have for your farm and objectives? Have you discussed them? Have you written them down? Do you understand the goals and objectives maybe of a parent who is looking to wind down their operation, cut expenses because they want to leave it? And you know, this, we see this all the time with a father-son operation where the son wants to grow, he wants to expand, he wants to try new things, and the father's just tamping everything down. No, I just want to rest a bit. I don't want to do more. I'd like to do less. So if you discuss them and you write down goals and objectives, it can help with those family members so that they understand what you're trying to do and you can understand what they're trying to do, and maybe find some common ground and a pathway so that you both can achieve your objectives. Employees. Do the employees know what they are supposed to be doing? Do you have some sort of disability insurance to protect the employees? Do you have adequate life insurance for yourself so that if something happens to you, that your family is taken care of? So these are all things that are considered human risk. So it could be employees, it can be business members. Generally in farms, a lot of families are involved. Does everybody really understand what the goals and objectives of this farm is? And if it's your farm, I mean, it really falls on you to write it down and make sure everyone understands what you are trying to achieve together. Now, general risk, that's everything that can just get captured that's not in one of those first five. New technologies. Technology is changing at a rapid pace. Farms, and especially shellfish growers, all farms really need to evaluate new technology and how can it help your operation. Maybe it's an inventory tracking system. Maybe it's QuickBooks. It's a system that will keep track of all your business and financial actions and provide you with a chance to generate reports yourself rather than rely on an employee to data load all this information and pull reports for you. These are things maybe you can do for yourself, and the technology can help you, reducing the cost of doing this, but give you access to a lot more information and help you understand your business more. Retirement savings. Do you have a 401k? Are you trying to grow the business to the point you can sell it? Maybe it's, instead of 401k, maybe you should be thinking a whole life policy that takes care of that life insurance so that if should something happen, plus it's an investment. You know, again, talking to a sound, good financial person can help you look at maybe 5 or 6 different tools you can use to give you the protection you need for your operation, for your family, for yourself, and maybe for your retirement. Whoever is involved in your business, if it's a family member or anyone, a spouse, etc., do they know where all the documents are? I mean, I would recommend that you take a lot of your financial documents, put them in a binder, kind of almost like an emergency checklist, emergency binder, that if the building catches on fire, you can grab this one file, this one binder, and it's got all your life insurance policies, all investments, checkbook information, you know, etc. It's kind of in one place, and you can grab it and take it with you. That way, everyone knows where it is, and that's the place all those documents get filed. Are you hopefully you're constantly looking over your financial information to look at how well this business is running, and are you, what are your goals, and are you on the road to meet those objectives? Having that plan in place will help you succeed in getting there. You know where the benchmarks are. It'll help you jump to those benchmarks. All right, now we're going to jump to the SWOT analysis: strength, weakness, opportunities, threats. again, I've got the link to the actual SWOT analysis on the USDA RMA website. So, but this is a simple tool that I would suggest every student, every farmer, anyone use. Even if you're going to buy a car, just do a quick SWOT analysis. And all that is just these 4 boxes: strengths. If you're a shellfish grower, maybe you got a great site. You can produce shellfish 16 to 18 months. You can bring them to market. You got a great market. You're getting real high prices. You just list all your strengths. And I would have, if I would recommend that any business person, any shellfish grower, provide every family member and every employee in their operation with the risk management checklist and the SWOT analysis. Get their feedback. Let them participate in this business. And what you think is a strength, they may see as a weakness. Or same on the checklist. They may see that you haven't addressed something that you think you've addressed. So in this case, we're looking at strengths. You can list every strength that you can think of. Maybe you've got a lot of experience. You want to put that under strength. Maybe, you got whatever, but then you take your weaknesses. Well, maybe it's labor. Well, it's family members. Okay, what can you do? A strength and a weakness, those are things that you have control over. You're the one that has the grant. You know what that grant can produce and how quickly. That's a decision you made. Market, you know who you're selling your product to, so that's a strength. Weakness, labor. I've worked for USDA for way too long, but I would say the biggest weakness I've seen in most farms are family members. They're great at something, but that's not the job they have. They're doing something that they're not particularly good at, but it's just the pecking order. The oldest sibling wound up being the manager. The next one wound up taking care of the crops, and the last one wound up taking care of the animals. That may not be their strength, but there's just a certain pecking order, and people never sat down and said, analyzed what the strengths and weaknesses of those family members were, so they get plugged into jobs that they weren't particularly good at. Seed source could be a strength, could be a weakness. If you have one source and you're kind of at the bottom of the purchase list, you can turn that into a strength where you can get multiple sources. Really have a great relationship with that supplier, so that when you call, he knows you're a legitimate grower and you're going to be paying, and he'll ship the seed. That you've got that relationship. Marketing. If you've only got one commodity, oysters, that could be a weakness. You can do a great job with it, but if you have an norovirus outbreak or something like 9/11 happens where the markets are shut down, that could be a weakness. And here's a chance maybe to address it by expanding your the number of commodities you're growing. Maybe it's just expanding the markets, but it's not saying it's good, bad. It's just saying it's something you ought to be concerned about and thinking, what can I do to strengthen this weakness? Grant, if it's accessible by water, over here I said you got a great grant, but maybe it's only accessible by water. Think of a situation I saw recently, a mussel operation. Great site for growing mussels. They could produce them twice as fast as being close to shore. The only problem was it took 2 hours to get the boat out to harvest them. So every day a crew takes them 2 hours out and 2 hours back. They could only harvest for 4 hours a day. Now, that's a weakness for that grant site. But maybe as these floats become ready to harvest, maybe they can move them closer and to the dock where they could actually harvest them. These are just things that the growers got to consider when they look at strengths and weaknesses. What can they do to fix a particular weakness? Maybe it's get a bigger boat or a better boat. Opportunities. These are opportunities. They're out there. You really don't have control over that particular function, but you may be able to take advantage of it. An opportunity may be to expand. Maybe there's a solid market for quail hogs and mussels. Maybe it's just expanding the number of commodities you have. Lessens the risk in terms of one commodity being lost, and it may give you, market diversification, and you may have a good site. Those are opportunities, and until you actually go out and try to capitalize on those opportunities, they're just opportunities. Threats. These are things you have no control over. Well, you have no control over them, but you can mitigate the threat that this poses to your operation. Ice in the wintertime. If you're in an intertidal situation, maybe you need to bring the oysters off the grant and put them in storage. Maybe you put them in deeper water. You've got to assess the cost of doing each of those functions and what is the risk. Cold storage. Maybe you have a hard time getting your product to market and keeping it cold enough. Maybe purchasing a reefer unit for your pickup or your truck, can move you further into the market. And there are plenty of programs that will help you purchase, storage, either cold storage for storing oysters or for transporting them. So these are all things that could be a threat. You can't obviously make change the weather, but you can take some action that will mitigate the damage done by that weather. So this is a simple process. It's just, those 4 items. And as I said, if you buy a car, what are the strengths of that car? Oh, it's going to last forever. It can seat 12 people, etc. Weakness, poor gas mileage, mechanical issues, etc. So you do that with everything you do, and it just makes you conscious of what those 4 items are in any business activity you get involved with. With that, we're going to move right into what is available at USDA for risk management programs. As I said earlier, USDA Risk Management Agency is primarily involved with creating crop insurance products for a variety of commodities across the country. For aquaculture in the Northeast, there's a cultivated clam policy on Cape Cod and in Virginia for cohogs. And then there's a revenue policy for any commodity in the United States. Cultivated clam policy is it's a dollar-based policy. Clams must be a minimum of 10 millimeter to be qualified, and they have a mortality rate of 40%. So you gotta, that's your benchmark is a 60% survival rate. Coverage starts. Yes.
So what does a dollar policy mean? And are things not covered? Like
a dollar policy means that they take each cohog you have and convert it to dollars. Now, why they do it this way is undersized cohogs are worth a lot less than a mature cohog. So in everybody's inventory, you've got a whole series of different size cohogs or oysters, or it could be nursery. So what they do is they look at the day of the disaster, they will convert it to its value. So the day before the disaster, it was worth a 10 millimeter oyster's worth 10 cents. So you lose it, that's the value. You'll see this in a few minutes when I get into some of the, I guess some loss calculations. So basically you're taking each clam, converting it to money.
And is there anything that's not covered in a loss?
The cultivated clam policy will cover generally anything that is a natural disaster. Okay. Crop insurance generally is trying to protect you from natural disasters. So malfeasance is not covered. Vandalism is not covered. Vandalism, theft, etc., things like that. This would be storm-related, weather-related losses.
And as more dramatic climate effects potentially might happen, whether it's an algal bloom or incredible heat or something like that, it's still covered, or is that starting to be talked about potentially as not being able to be insurable.
No, at this point, now, provided the clams die, they're covered. If you have a red tide situation where you can't mark it, but the clams don't die,
Mhm.
well, they're still in your inventory.
Okay.
So the market's not protected on this plan. This is to protect the actual clams. So yes, anything weather related, even though climate change, and that's starting to obviously spill more into some of the losses we're seeing, they're going to be protected.
So Paul, along the same lines, and this happened to us, if there's an oil spill, all right, those farmers would then turn around and try to sue or whatever to get recovered losses because that's a man-made event.
Exactly.
Okay.
Theft.
And that's another very good reason to keep accurate records of their inventory and everything else, so then they can quantify that.
Absolutely.
Yeah.
Absolutely. And in this crop insurance, hopefully you would have those inventory records. You should have them as part of your business plan. But crop insurance will also help you keep them. But yes, so anything that's non-weather related, you need to go after the person who caused the damage. If you have an upweller and I drive my car into the light pole and you lose power to the upweller, I'm the one that's really liable for that loss. I caused it. It wasn't weather, so you have to go after me or the oil company. Or if you can find the person who stole your shellfish seed or stole your oysters, then you have to go after them.
Great, thank you.
And it's, so you can see, provided you're in the program, you're covered for the 12 months that you have clams. So here's a whole list of different potential losses. Crop insurance does cover wildlife damage, and you're going to see there's a public USDA program does not cover wildlife damage, but so any of these things in here plus wildlife would be covered. Now, because this is a USDA program and USDA really would like to see farmers purchase some level of protection, it's heavily subsidized. USDA has moved from a post-disaster program to kind of a preemptive disaster type program. So the old programs from the Depression are gone. There's more of this, you purchase the coverage level you need for your operation and et cetera, rather than wait till there's a disaster, then you just go to the local USDA office and they give you something. But in this process, you'll notice that the level of subsidy, especially for policies with less coverage, is high. 67% for 50%. So that coverage level is 50% of the inventory that you have in your grant at the time of the loss. They're going to subsidize it at 67%. Now, if you would like to buy up coverage so that you can protect 75% of your inventory, obviously there's a lot more risk for the government. You've really mitigated your risk. You've reduced your risk because you've got such good coverage. The subsidy level, though, is quite a bit lower, 55%. And then you've got to pay 45% of the value of that policy. So it works inverse to the level of coverage. The less risk for USDA, the higher the subsidy. And that's true, not just the clam policy, of all the yield-based policies, all the policies at USDA. And you can get what they call a catastrophic coverage, a CAT policy. That's just 50% of your inventory, $300. And it doesn't make any difference how big the operation is. It's an administrative fee that you pay. So this is what they call a catastrophic coverage. Every grower can purchase that. All right, so this kind of gives you a loss example. So let's assume the disaster happens tomorrow and the value of your inventory was $100,000. You had 500,000 clams out there at whatever value, and you had 75% coverage level. then your protection is $75,000. If you lost 40%, you lost 40%, or no, $40,000 survived, you had a $60,000 loss. You can see the $25,000 is your deductible, so 75% of coverage is $75,000. Basically, you're on the hook. The $25,000, that's the money you put at risk, and your loss is $60,000. You're going to get an indemnity payment of $35,000. So again, they're taking all those claims and converting them to dollars. And what's important is what Seth said about good inventory records. You got to know the size, because each size, the value is going up. A legal size oyster is probably over 50 cents. An oyster that's 10 millimeters is going to be worth, maybe 2 cents or 10 cents. It's worth a lot less in your inventory. All right, now we have whole farm revenue protection. This is available in every county across the country. It's a revenue policy, so if you want to protect your income, that is your bottom line, this program will help you. It'll insure your farm income. It can be used with any crop insurance policy except a cat policy. And the reason they exclude cat, basically the government's already given you 100% subsidy on a catastrophic policy. So there's thinking, you've gotten plenty of subsidy on this. We're not going to let you participate in this other program. So, but any other buy-up policy, you're going to be able to participate. Coverage levels, you can insure 50% to 85% of your average income. It's available in all states and all counties, so it's available really to every farmer. It's based on a 5-year revenue history. If you're a beginning farmer, you only need 3 years. And the premium subsidy is 55 to 80%. Now remember that 80% is going to be on a 50% coverage policy. Less risk to the government, higher subsidy. So basically, they're going to take 5 years of your Schedule F and average it. You're going to do a business plan which shows what your expected revenue is for 2020. You can insure a percentage of the lesser of these two. So if you're getting ready to wind down your business, so your average income was $100,000 per year, but you're going to roll it back now, it's only going to be $80,000, then you can insure a percentage of that $80,000. So they're going to look at both your expected income as well as your average income. You need to determine the level of coverage you want. You harvest and market your crops. And then when you do your taxes, you'll know what your actual revenue is. So this kind of gives you the best of both worlds. If you have a natural disaster that wipes out your crop, your revenue's down, you could probably collect on this. If there's a market disruption, an event like 9/11, where all of a sudden the price of oysters plummets and you market them, and instead of getting 50 cents or 60 cents, you're getting 20 cents, again, you may have some market protection. So it gives the grower a little better level of coverage in terms of not just natural disaster, but also some market protection. Here's an example, a 5-year revenue average, 100,000. You've got 75% coverage. Your revenue produced was 30,000. Your loss was 45,000. So with a revenue of 30,000 plus the 45,000, it gave you $75,000 in coverage of income. Without FRP, WFRP, you only had 30,000. So it just gives you kind of a floor of how much money you can lose in this business. Now it's an insurance policy, so you're paying for it. And you can see the premium for a 75% coverage level is $14,000. So, that's total premium. Now it's obviously take out the subsidy, but you can see that this product is money you're going to be spending to give you some insurance. Would it be worth it to spend that money someplace else? That's a decision the grower has to make. And we've had these discussions with lots of different types of growers where they would rather invest that money in their property to put in irrigation, frost protection, or whatever. But that's, that's a decision the grower has to make. But this kind of gives you an idea of what it costs to purchase that level of coverage. All right, so crop insurance policies. If you go down to clams is November 1st, or November 30th. Your March 15th for your whole farm revenue protection. Now, clams, the policy is in effect December 1st. Whole farm revenue, it is, I believe it's 30 days after the day you sign up. You buy a policy December 1st, January 1st, it's in force. You buy it March 15th, April 15th, the policy is in force. So you can't buy it just before, you got to look ahead, I guess. The sooner you purchase a policy, the sooner you're going to have some coverage.
Paul,
Yes.
Scott, I think, has a question. And also, you
Sure.
look really funny because you have no light behind you.
I know.
So I thought maybe for the video, it would be better if you could put a light
You want
on.
me to turn on some light?
It'd be great.
Thanks, Jen. Paul, question on the whole farm revenue, just clarification.
Yes.
Did I hear correctly that you have to have cat coverage, catastrophic coverage to have the whole farm revenue policy?
Do you have to, I didn't hear your question. Do you have to have tax?
Cat. You have to have catastrophic coverage.
You
before
cannot
can
have
whole farm
catastrophic
revenue.
You cannot have
have
catastrophic coverage because
Okay.
the
So you
cat
can have-
policy, the cat
Go ahead.
policy is already subsidized at 100%. So they just, for some reason, when they put this together, they said you cannot have catastrophic coverage.
Okay, so so for whole farm revenue, you can have that for an oyster farm, or is that only for hard shell clam?
No, you can have it for oysters.
You can. Okay.
You can have it for
Very good,
really
thank you.
any commodity, including hemp. Now, if you have more than one commodity, you get a higher subsidy. The subsidy worksheet I showed you was assuming you only had one commodity. Yes, you can have it on oysters, you can have it on mussels, you can have it on kelp, hemp. There's a variety of crops you can have whole farm revenue on, as well as
Great,
all the other traditional commodities.
Great, thank you.
So that, cat coverage, you cannot have a cat policy. And when we get into the public option, the Farm Service Agency program, I'll talk about that also. Anyway, so these are the sales closing days. So you have to purchase these policies from a private crop insurance agent. So USDA develops the policies. They allow insurance companies to sell the policy. The insurance companies have agreements with USDA on how much risk they're going to take and how much of the income they're going to get from the policy. So, but you will be dealing with a private company, and you can shop around. Generally, the price is the same, but there are different companies that may have a few different options that you can look at. So, to find a federal crop insurance agent, you just go to USDA RMA, and there's the website. You can look up an agent. And crop insurance is supposed to guarantee you a payday. Now, I kept talking about the public option, the Farm Service Agency program. It's called NAP, Non-Insured Crop Disaster Assistance Program. That covers any commodity that there is not a crop insurance policy on. So in Massachusetts, we have a quahog policy on Cape Cod. Maine doesn't have one. Quahog growers would have to purchase a NAP policy, or Rhode Island growers would get a NAP policy. NAP mirrors crop insurance. If you look over to the upper left, you'll see the level of coverage, not quite as high as crop insurance, but you can get up to 65% of the yield, or in the case of oysters, value at 100% of the price. Now that's called buy-up coverage. So you pay an extra premium for that. The benefits, It mirrors regular crop insurance. It gives you some level of protection. It's not a perfect policy, but it's better than nothing, I guess. It gives you some coverage. Now, if you look down, there is a non-refundable service fee of $325 per crop. So if you have oysters, you're going to pay $325. If you have mussels and kelp, whatever, it's an additional $325. Maximum though is $825 per county. So if you have 3 crops, if you have 10 crops, you have 1,000 crops. Maximum you're going to pay in that one county is $825. Maximum in multi-counties is $1,950. Now, beginning farmers, veterans, limited resource, and socially disadvantaged farmers, that $325 fee is waived. A beginning farmer is any farmer that has been in business less than 10 years or less. Also, on buy-up coverage, if you buy the 65, 100% buy-up coverage, the premium, you're only going to pay 50% of the premium. So it's USDA is trying to give beginning farmers and veterans and disadvantaged farmers help, trying to really push them into a insurance product, help them get into one of these products. And for a beginning farmer, this, it's something that gives you some protection. So this covers all crops not covered by crop insurance. You can have a NAP policy with whole farm revenue. And the only stipulation is you cannot collect under both policies in a given year. So if you have a NAP loss and you get $50,000 and then your whole farm revenue, and you're already paid, and your whole farm revenue says, well, you can get $60,000 through whole farm revenue, you'd have to pay that $50,000 policy back to FSA to collect your crop insurance payment, and vice versa. You can select the higher of the two, but you cannot collect both in the same year. Okay, premium calculation. So you got a service fee of $325. Your guarantee, 5.25% of whatever the value of your inventory is, and the grower gets to select that amount of money. So I think it gets a little tricky for shellfish growers because you could buy high coverage, and if your loss is early in the season when there's no value in the seed, it's probably not going to give you the level of protection that the guy that the CAT policy that purchased the basic $325 policy would pay. So it's something the growers have really got to sit down and analyze how much insurance they want to put, how much in coverage they want on their inventory. Again, FSA will waive the service fee and reduce the premiums by 50% for those groups. Okay, NAP is, again, it's a value loss policy, so they're going to convert all your oysters to dollars, and that's the value of your inventory. And what will happen is if you have a loss, they will try to take a snapshot the day before the disaster and a snapshot the day after for your inventories. So if you have great inventory records, they will start with that inventory and convert it to dollars, and then go out and do an appraisal as soon as possible after the disaster to determine what your inventory is. If you don't have good inventory records, then FSA will take your seed and will extrapolate normal mortality from that seed, and they will create an inventory for you. And every state is different. Massachusetts tends to be very conservative. Maine tends to be very liberal in terms of the level of normal mortality. My advice to growers is have good inventory records. That's your best and most secure way of getting a fair treatment under the NAP program. All right, so here is a very quick example. And you can see the prices and what happens to the level of coverage. Obviously, the 50mm oysters are worth a lot more money. That greatly influences the amount of coverage you have. So in this example, The grower has $60,000 in value before the disaster. Post-disaster, he has 32,500. His actual loss was 27,500. If he has a catastrophic policy, he will not collect because his guarantee was around 30,000, 50%. Now, if you just reverse the loss, and if he lost all the seed, if he lost 100% of his seed, there is no way he would ever collect because the value of the 50 millimeter oysters is so high in comparison to the small oysters that it would always offset the potential loss there. So it's not, I mean, I think there is probably more risk in losing seed. However, there's less value. So it just doesn't, it just generally will not pay. Obviously, the value is in mature oysters. If you lose those, that's 2 or 3 years of hard work. But that's also where you will get a real benefit in terms this program could work well for you. So, to purchase an app policy for shellfish growers, September 1st. And the policy is in force on October 1st. As soon as you develop or deliver your inventory to the FSA office. For perennial crops such as apples and peaches, pears, any non-spring seeded crop, November 20th, and that's obviously those years are wrong. I got 15, it's 20 or 21. And any annual crops is March 15th, as well as whole farm revenue. All right, other USDA programs. Rural development. Maybe Scott wants to jump in on this. Rural development has a variety of programs for value-added grants for producers to rural energy programs. So these are grants that can help you in the case of a value-added product. Maybe there's something you could create with for your oysters where you could sell them as a value-added product. I know a lot of people that have fruit may convert it to jam, etc. This is where you would do a market study and get some grants to help you start a small business. A lot of farms have been getting in the rural energy program. REAP subsidizes the cost of putting in renewable energy. NRCS, as I said, in Rhode Island, they're doing some oyster reef restoration on Cape Cod. In the last farm bill, I think they did some stuff with quahog growers and retrieving the nets or biodegradable nets or something, and changing out the boat motors from 2-cycle to 4-cycle. Any program that they deem that can help improve the environmental quality. There may be some cost share funds available. Again, if you're a beginning farmer, those cost share funds could be up to 90%. So if you had an old boat motor and they're going to pay 90% of the cost of giving you a new boat motor, that's a pretty sweet deal. It may make making that purchase worthwhile. Plus, they also have technical assistance available for anyone who for environmental concerns. FSA, as well as the NAP program, they also have a loan program. Direct loans, so you can use a direct operating loan to purchase boat, 7 years to repay it. Any equipment would be 7 years. Seed and operating expenses, it would be 1 year or until the crop comes to market. So if you're starting out as an oyster grower and it's going to take you 24 months before your seed becomes mature enough to market, this loan would give you coverage out to 24 months. You wouldn't have to repay it until you harvest the crop. And there's up to $300,000 available in both operating and ownership. Ownership, up to 40 years to repay it, and you can use that for any real estate purchases or real estate improvements. And the ownership loan, you can work together with another bank, and generally FSA will take the second position on the mortgage. So it may be a good way to maximize your credit with other banks such as Farm Credit or Farm Credit East. So those are two loans that are available to all farmers. They have emergency loans. Generally, the emergency loans haven't been used much lately because the interest rate is, I think, 3.25%, where the operating and farm ownership are actually, I think the operating is 1 to 2%. It's low. Guaranteed loans, FSA will guarantee a loan with a bank. So if a bank is not sure about your operation and its stability, FSA will give them a guarantee up to 90% of the value of that loan. So it may make it that a bank like Farm Credit East, if you don't meet some of their criteria, you could wind up getting a guaranteed loan from FSA. That will help Farm Credit make that loan. All right, now, the Mass Department of Food and Ag has a variety of great programs that can help you either with renewable energy, environmental enhancement or improvements. They've bought a lot of equipment and made a lot of changes for a variety of farms. Food and safety improvements, etc. Rollover protection if you have a tractor without a rollover protection on it. So MDART is a great resource. Again, you want to make, everyone wants to get on their mailing list and know these people, know the players, because they're out there to help you and they do want these programs to work well. So if you make an inquiry, they will try to work with you. Private opportunities. You have Farm Credit East. That's the major ag lending bank in America. So that's who you're going to be borrowing from if you don't borrow from the Farm Credit Agency. The CARE Project. This is they provide funding. I think they take money from maybe 401ks, etc. But they provide small loans to help farms. And again, it's a good source of credit. They tend to be very flexible in terms of the terms. So it's something to look at. Equity Trust, same thing. They're taking retirement funds and they use it to invest in farmland. And that helps one preserve the farmland as well as get a good return for people on their 401ks, etc. So there's a couple different private funding opportunities for operations. And with that, that's kind of the end of my presentation. So we, as I said, we do this through a grant with from the Risk Management Agency, and I'm Paul Russell, and the partner I work with is Tom Smorowski, and that's the number you can contact us at. So with that, I would thank you, and I'll take any questions.
Scott, do you have any questions?
Yeah, thanks very much, Paul. Great presentation, and appreciate that you added in the grant opportunities at the same time. On that note, on grant opportunities, also wanted to add that there is, although it's the first time they've issued it, I believe, the first time out, one from the Massachusetts Division of Marine Fisheries. But to your point, I think staying in touch with the various state agencies, whether they be regulatory or support, is good to get on their newsletters and their mailing lists. That way you can be appraised of those programs when they come up. The other point I wanted to make is when you mentioned SCORE, is for any folks who listen to the presentation, it's a real easy URL to get more information from SCORE and to actually find some business counselors, and that's score.org or score.org. So some good opportunities for that information.
Visit your local FS Farm Service Agency office, and they'll put you in touch with the SCORE person. Tom and I have both met several times with the SCORE people, and I'm impressed with the number of business, these are retirees, that have ag background. So you're more than likely you're going to find someone who knows your business and can really help you.
Quickly, the NAP program, that has to be signed up for, is it by the end of September?
September 1st.
Right.
And
Okay.
it's in force on October 1st.
Yeah, I missed it this year.
Oh.
A fun fact is when I started my business 39 years ago, I sat down with SCORE folks in New Bedford who really helped me out.
Good. That's
Great. And Paul, oh, your email's there and you're open for questions?
I am available for questions. Yeah, you can email either Tom or myself, and we'll answer questions.
Great. Well, I can't thank you enough for your time. This was amazing.
Good.
Really.
I want to say, Paul, this is much better than trying to cram it in at a annual meeting. A lot more details and a lot more information. So thank you very much.
But you know, at an annual meeting, we got so many growers who know a lot of these things already. This one is for kind of the students, and I guess is a much broader view of this. And Tom and I are, for shellfish growers, we are available. If someone wants us to help them understand the crop insurance products, we would be more than glad to visit and go through the whole process with them.
Terrific.
That's
Good.
Great. Thanks a lot, Paul.
Thank you. Thank you, Scott. Seth.
Thanks, Jen.
Jen.
Thank you.
All right.
Thanks,
Goodbye.
Bye-bye. Have a
Bye.
good evening.
Are you still on, Jen?
I am. But, and
Yeah.
yeah, I'm here. And so Scott's still there, but it's okay.
Uh,
hang-
Just quickly,